Next is now we come to the art of investing. We have seen the crashes, what is that we have learned and what is that we should implement. But now the point which comes is art of investing. Because now we are looking at if future crashes comes, what is that I should do? Process is very simple. There is nothing new. I'll be very honest. There is nothing new. The difficulty comes in following it. It's simple, right? If you have to cook some dish, be whatever dish it is, right? What is that you'll be doing? We have to follow that process, right? What is the amount of salt? What is the amount of time we have to cook? Right? What is the amount of masala we have to put? All that is process, right? I can't avoid this process if I need to have a good dish. Similarly, if you really want to manage your portfolio, irrespective of whatever happens in the market, you have to follow a process. That is what we are trying to say now. The biggest lesson from all the crashes could happen because of various reasons, be it economy, be it some problem with some country, or be it with the general kind of a black swan event. It could be anything, reason. But the point is, let anything happen, still can I manage my money well? That can only happen if your process is right. That process is art of investing for me. That process is the art of investing for me. What is that process? I need to attach a goal for my investment. The starting point is that I find many people coming and asking the advisor, boss, I can invest 50,000 per month in an SIP. I can invest 1 lakh per month in an SIP. I have 5 lakhs with me. Where to invest? If you are not going to attach a goal to those things, because absolutely you will be clueless. Your advisor will also be clueless because he doesn't know for what you are investing this money. You yourself don't know what you are investing. Then how can I suggest you the right investment? So the first starting point is be clear with your goal for what you're investing. And the second point is understand your risk appetite. Today, when markets are bullish, everybody will say, I'm willing to take risk. The moment market corrects by 40%, everybody will say, boss, let me take my money. You should have stopped me from investing. You should be very clear what is the level of risk you can take. I'm investing 10 lakhs. If I lose 2 lakhs also, I have the capacity to hold on. Yes, probably you have a appetite to take risk. So very important to understand these two. We have discussed earlier also. Your willingness and ability to take risk. You need to be very clear on your willingness and ability. Willingness is what? I mean, you might be tempted because markets are doing well. That could be the willingness part. But ability is what? If something happens, do you have the money to withstand that? As I said, 10 years that correction was there in 1929. I'm not saying it will take 10 years. Whatever period markets are down, are you able to hold on to your investment? That is the ability. Which means what? In between, your goals may not be fulfilled. Which means you have to find money from somewhere. So do you have the resources to meet all this? That's where I said, understand that your ability and willingness to take risk. This is the process you have to follow. Then you will not worry about whether market correction happens or not. If you have missed that, please ensure you are doing all this at least now. Because another correction will come, no doubt about it. As I said, when it will come, how much percentage is the question. Already we have seen, right? Even in that last 2-3 months, from Nifty 18,600, it went below 17,000. And again, we have come to 17,900 or whatever it is. You see the volatility, 18,600 to below 17 and again at close to 18. These things will keep happening. So if your process is not right, you will be disturbed. If your expectations are not right, you will be disturbed. So the best method or the best process to avoid all these future problems is you have to follow asset allocation. I can't put all my money in one asset class. I can't say that I have a long-term goal, 10 years. So I can definitely put my 100% money in equity. No. A proper asset allocation is the need of the hour. This is the only way you will be able to reduce risk in your portfolio as and when any events happen. There is no other way to manage your portfolio risk other than asset allocation. And of course, we have to do the rebalancing every year. We'll touch that as we go forward. And another important thing is tax harvesting is very important. As I said, I'm just putting the process in place. That's all I'm saying. Do all this, you will reduce the risk in your portfolio. The whole idea is what is the main lesson we have to learn from all this crash? Because tomorrow, if such an incident happens, my portfolio should not be damaged. My portfolio should not get damaged. That's the most important lesson. Now, how do I ensure that I have to follow this process? What is that process? First, define your goal. Understand whether you have the ability and willingness to take risk. Do a proper asset allocation. Keep rebalancing the portfolio. And of course, use those techniques of tax harvesting. It is nothing but adjust the capital gains and loss. See that every year that 1 lakh is booked, right? 1 lakh is free, right? So I can ensure that every year I take 1 lakh from my profits if it is there, so that I need not pay any tax. That is what I mean by tax harvest, right? So all these things we have to do it as a process. That's where a role of an advisor comes in, and it really helps you. Yeah. Next, let us understand further. As I said, defining goals alone is not enough. Those have to be SMART goals. What do I mean by SMART goals? It has to be specific. It has to be measurable, right? And then definitely it should be, easily achievable. It has to be realistic, and it has to be time. For example, somebody might say, I want to plan for my retirement. It's not a goal. You are just saying, boss, this is what I want to do. But if you say, I need 2 crores for my retirement, yeah, and tell me how much I have to invest every month today, assuming that I will get a return of 8% or 7%, yeah, then all these things are covered. Then it becomes a SMART goal. Because you said 2 crores, your goal is retirement. So you have mentioned measurable 2 crores, achievable. You said so many 6-7%, which is realistic and achievable also, and time bound. You said how many years for retirement. So this is what I need to be clear when I'm saying goal. Now you tell me, if you come and instead of giving me a SMART goal, if you come and tell me, boss, I have 50,000 to invest every month, how can I plan your investment? So if you are doing this, I think that is the first thing you have to change. And based on your risk appetite, you will be clubbed under either conservative or moderate or aggressive. If you are a conservative investor, you are expecting around 6%. If you are slightly moderate, you may expect around 9%. If you are aggressive, you cannot expect more than 12%, right? So now my portfolio will be built based on this return assumption. So the portfolio is going to generate this return. Please remember that scheme will give it or not is coming later. I have not come into the product at all so far. I'm still talking about the process here, right? So now this is where I have to ensure that I do a proper asset allocation. We'll see that also. And then build a portfolio. Then I build a portfolio. So the point here, what I'm trying to say is, again, I want to highlight this point. Your process has to be in place if you want to meet any future events. Otherwise, you will be leaving it everything to God or luck. If you don't have a process in place, you are leaving everything to God or luck. Because somebody will come and say, this has given, people say that, right? Sensex has given 16% over a period of so many years. Well, that 16% has come with that volatility, right? you may not get that 16%. Why? Because you would have exited in between when the market corrected by 50%. Then where is the question of getting 16%? That's why I said this process is very important to follow. Focus on this process. That is one important lesson we should learn. Have a process in place. Yeah, very important. Now we have decided, let's say, just giving an example, I'll also show an example in the following slides. I've decided I should invest in 60% in equity. So in that 60% will be the diversification which will happen now. You might invest 40% in debt. Now in that 40%, I should be clear how I am diversifying. Will I invest in a short-term debt fund or a long-term debt fund or a liquid fund? How do I diversify? That is important. The next point is, let's say you want to invest in 2-3 large cap funds. How do I select those 2-3? What is that I should look into? That it is not return. Please remember, the return of the scheme is irrelevant. The return of the scheme is irrelevant. Why irrelevant? Past data. Nobody can say next 10 years how much return the scheme will give. My portfolio has to generate 8 or 10 or 12%. So I select the products based on that. I don't select a product because that product gives me 10 or 12% return. What percentage I should have, that portfolio I am going to frame it. My portfolio is going to generate the return, not the scheme. Of course, scheme will help you, but the scheme return is not the portfolio, right? My portfolio return would be something else. And I will focus only on my portfolio return. Yes, if the individual schemes in that is not doing well, I'll replace it. So I'll never just go by the product or the scheme return. And please understand, when you are building a portfolio, debt funds have to be there. Which means what? You have to understand there are risks in debt funds also. You cannot say, debt means it is just like bank FD. You give money, you will get back the money, you will get the interest. No. Debt funds work in a different way. It doesn't work that way. So you have to understand there is risk. And when you are building a portfolio, what you should ensure, that's where advisor helps you a lot. You have to select 2 asset classes which will behave differently. We call that correlation has to be low or negative. Very important. Very, very important. That's where I'm focusing on the process. Please focus on the process. If you don't want to have disappointments when any event happen in the markets or in your life. When any event happens in the market or in your life, you should not be disappointed. If you are not there, your family should not be disappointed. Which means I can achieve that only when I have a process. What is that process? This is the process you have to follow.